Jargon has one big purpose: control. But if you understand the game, you can play too. If you don't, you're forced to trust the so called experts. I truly believe financial firms use complex terms to create the illusion of specialized intelligence. But it's not always about hiding something shady. Sometimes it's just reinforcing the idea that you can't possibly do this without them. So if you've ever listened to financial news or read a money article and thought to yourself, wait a minute, what did they just say? This video is for you because today we're cutting through the noise. But first, hi, my name is Ogechi. I'm a financial educator, investor, and founder of One Savvy Dollar. Welcome and welcome back to my channel where we talk about the stock market, money mindset, personal finance, and trending money news as you build your first 100K in the stock market. Thank you for spending time with me. I'm so glad that you're here. Next, if you haven't liked and subscribed, please do so that we can grow our wealth together and build the community over here. So let's get into today's topic. We're going to decode the language Wall Street uses and why they prefer you stay confused. I want you to think of Wall Street like a high stakes poker game where everyone has their own language so that outsiders can't easily read the table. This language can, one, hide risk. For instance, the word volatility sounds cleaner than your money might drop 40% overnight. Two, this language can create urgency. For instance, time-sensitive opportunity often means we want your cash now before you change your mind. And three, this language can signal status. For instance, throw in enough buzzwords and you sound like an insider, even if the idea itself is really simple. So today I'll be breaking down the most common financial terms and explain what they really mean and how they affect you. No BS, just simple, real explanations. So get your notepads. Number one, we'll start with something you most likely hear all the time: bull market and bear market. A bull market is when stock prices are going up, so there's optimism, people are investing, and the market feels strong. A bear market, now that's the opposite. Prices are falling, people are nervous and selling off their investments. So, in essence, a bull market equals confidence and a bear market equals caution. Number two, diversification. Sounds like something from a corporate boardroom, right? But it's simple. Diversification means don't put all your eggs in one basket. You spread your investment so if one fails, the others keep you afloat. In essence, diversification equals risk management. Number three, now let's break down a weird one: liquidity. In finance, liquidity means how fast you can turn something into cash without losing value. For instance, cash is highly liquid and real estate is less liquid. So if someone says this asset isn't liquid, it means that it's hard to sell quickly without taking a loss. Number four, we'll move on to compound interest, which is the secret sauce of wealth building. Compound interest is when your interest earns interest, so your money grows faster over time. That's why it's important to start early, stay consistent so that you can watch that snowball roll. Compound interest simply means your money making money, and I think I like the sound of that. Number five, let's simplify this quickly: assets versus liabilities. Assets are what you own and bring value in. Liabilities are what you owe. So assets put monies in your pocket and liabilities takes monies out. So the more assets you have and build, the stronger that your finances are. Assets minus liabilities equals your net worth, and your net worth is a strong measure of financial success. Number six, here's one that confuses almost everyone, and I promise I used to be confused too: APR versus APY. APR, which means annual percentage rate, is what you pay on loans. It's the cost to borrow and it doesn't include compounding. While APY, annual percentage yield, is what you earn on savings. It does include compounding. So when comparing savings options, look for the highest APY, and when borrowing, go for the lowest APR. Got it? Good. Number seven, inflation. Inflation is when prices rise over time. It means your money buys less than it used to. For instance, just the other day, I went into Dollar Tree to buy household cleaning supplies, and prices are now $1.50. So they've gone from $1 to $1.50, which means $20 can't buy you 20 items anymore. That's why investing or earning interest on your money is super important. Otherwise, your money is slowly losing value. Last but not least is equity. Now, this is one word that has multiple uses. In real estate, equity is your share of ownership after debt. So, for instance, if your house is worth $300,000 and the mortgage left is $200,000, you have $100,000 equity. In business or stock investing, equity means you own a slice of the pie. So overall, equity is ownership value. In today's video, we've talked about bull versus bear market. We've talked about diversification, liquidity, compound interest, assets versus liabilities, APR versus APY, inflation, and equity. As you get familiar with these words, you realize most of these are just fancy words for really simple concepts. And when you understand the language, you can ask better questions. Because going forward, I want you to stop nodding politely and start saying, explain that to me in plain English. You'll see that that's when the power shifts. Here are a couple of things you can do starting today. Number one, ask for translations. If they can't explain in simple English, it just might mean that they don't understand it themselves or they don't want you to. And number two, I want you to learn the basics because financial literacy equals financial power. And a little financial literacy goes a long way towards spotting the nonsense. So don't be intimidated. Remember, jargon is often just a smokescreen, and Wall Street isn't magic. It's just money, math, and a whole lot of marketing. And now you speak their language too. So if you found this video helpful, do like and subscribe for more no BS finance tips, and tell me in the comments what financial term still confuses you. I might break it down in the next video. My name is Ogechi from One Savvy Dollar, and I'll see you in my next video. Bye-bye.